Joining us now to share his commentary on the day's markets performance is Lwazi Matakane from Nedbank Private Wealth. Lwazi, thanks so much for your time this afternoon. As I mentioned in my market read and at the top of the show, investors really patiently waiting on those U.S. non-farm payrolls out later today. Expectations are for a 75,000 rise, slightly higher than the July's 73K increase. Compared to earlier this year, we are seeing a softer labor market, which of course boosts bets for rate cuts. Where are you at when it comes to monetary policy in the States? Data aside, pressure has also been mounting on Fed Chair Jerome Powell to cut rates.
Yeah, thanks, Ndawling, and good afternoon to your viewers and yourself. So, look, if we're looking at United States and monetary policy, it's a bit of a volatile situation where, market are perceiving monetary policy being politicized.
Yeah.
But we've seen the Fed chair obviously being amiable to what the president has been saying about rate cuts, and that's probably because, the president, when he first was on a campaign trail, was obviously about bringing jobs into the U.S. So when you're seeing a labor market that's softening in the U.S., I mean, the ADP the private payroll numbers were out yesterday, and they showed fewer jobs being created in the U.S., about 54,000 if I remember correctly. And previously to that, we had what do you call
Job
those numbers?
openings.
The JOLTS numbers, yes. So with JOLTS numbers that were out, and those are coming down lower. So there's fewer jobs being opened. There's lower jobs being created in the private sector, and now you're expecting non-farm payrolls to be slightly below. We also saw those uninsurance claim numbers yesterday that were slightly higher. So more people claiming unemployment insurance in the U.S. So it's a bit of a difficult slope, but the Fed has to look at two things. Inflation is the one, because those tariff increases haven't really transmitted through to consumers. We've seen companies front run the purchasing of inventories prior to those tariffs coming into place. So now with the tariffs in place, we might just see that transmission into consumer prices coming into to U.S. families. And then the other part is obviously the labor market, because they do have a mandate to look at the economy. So yeah, it's two tails, but we do have an expectation of interest rate cuts coming into September, and possibly maybe one more by November.
Really a tight walk a tight walk for the Fed Governor Jerome Powell. Considering what you've mentioned there, we are seeing perhaps, an increase in inflation when those tariffs do come through. And then on the other side, here we are with a softening labor market. I want to move over to what's been playing out in the tech sector. What's been boosting share prices on that front? Is it optimism surrounding Alphabet after the group avoided fines and the breakup in that antitrust case?
Yeah, so the antitrust case is obviously about IP. So if Alphabet can retain its IP, that's good for it. You're going to start seeing, AI models develop into probably search engines. But because Google has been here the longest, it's got all that IP, it's got all that search power. They can then infuse their own AI related searches and AI services on top of that and embed that into their Chrome. So it is a boost for them, but mostly sentiment towards tech has it's still on an all-time high, if you want to call it that.
Okay.
As a growth industry, NVIDIA has been doing well. The new chips that they're taking out, are said to be more powerful. They have got more markets to expand into, and all those things play into factors where we see the optimism and the negativity towards overvaluations really just cool down a bit, especially going into the rate cuts. That's also positive for valuations to tech industries.
Let's look at what's been playing out on the local market. Now, a Bloomberg report yesterday indicating that MTN is looking to acquire Telkom's assets. Who knows, maybe, second time's a charm. Let's get your take on that potential deal, Lwazi. And just on that, I noticed that Telkom's share price is in the red, reversing those gains we saw yesterday. What's the reason behind that? Does it have anything to do with that potential deal that could be coming through?
Yeah, look, it's a bit of profit taking after the share price rallied quite a bit yesterday. So with the Telkom and MTN merger, we know last time it was a competition commission. They looked at it from a spectrum perspective. Telkom has a lot of spectrum, and they don't want one dominant player within the spectrum market. So hopefully then with the fiber assets that Telkom has, Telkom can then sell those as a separate entity, and
Okay.
obviously that will bolster Telkom itself as an entity. But they're looking to make the deal at probably the same valuations as what Massive and Vodacom have concluded a deal at. So there's optimism on that end. With an entire takeover, look, it's all in the air. It depends on what the Competition Commission would say about having Telkom and MTN merge and having this one, super concentrated telco within the South African space.
Yeah, we wait and see, and hopefully it's not another 4 to 5 year wait when it comes to regulatory requirements and approvals. Let's get your take around African Rainbow Minerals posting a near 50% decline in earnings and pointing to weaker iron ore and coal prices. I'm just looking at that share price as well, down 7%. Is this on the back of the results or more of a response to the markets, right? I've been tracking what's been playing out in the resources complex, and we've seen it really downbeat over the week. I mean, today, a bit of some gains coming through, but yesterday it was down over 3%, if I'm not mistaken.
Yeah, look, those numbers were not very impressive. Like you said, those HEPs were down almost 50%. But if you start drilling into the numbers, apart from what they explained in the notes, that foreign currency translation as a result of a stronger rand, and obviously the basket price not being what they expected, there's issues around cost increases in some of the mines. So if you look at the Bokoni mine, which is the iron ore mine, that had higher fixed costs associated with it, and they're trying to obviously mechanize that mine. So there's capex expenditure that's associated with that. The Modigwa mine, which is part of the PGM complex, that also had cost increases, very minute, around 3%, and they didn't really have, the volume didn't come into play there. It was down about 3% as well. And on the coal front, that's where they've got the biggest hit. I think headline EPS on the coal division were down about 88% or so. So those coal prices were affecting, the overall picture with respect to revenues. So yeah, we're seeing a multiple front of lower commodity prices for their own baskets, and we're also seeing some cost pressures coming onto operations.
All right, let's hit pause on the conversation. Before we move on to your stock pick, let's take a moment to touch on what counters your industry peers are watching closely.
Yeah, so they announced their results this week, and and they sold off quite significantly. And you're in a position here where you've got a stock that typically trades at a premium to SA Inc., but now it's at a discount at the point in time when the earnings are actually at a bottom. So there's a few cyclical things that happen there, but I think the most important thing about Bidvest is they've gone through a 3-year cycle of investment. I mean, they've done like 20 different acquisitions, and they're bedding them now. So people complaining about their debt or worrying that they're overgeared should look over the next 12 to 18 months. They'll start deleveraging, they'll bed down those businesses, and then they'll end up with a really big, efficient, high-returning international services business and pay down their debt as well, and then recover in terms of volumes at the ports here and all of that. So I think it's a solid business. For once, you're getting it a single-digit multiple, and at the bottom of its cycle, your margin of safety here must be considerable. So this is one I really like from this result season.
Yes, Amazon's results came out, and the share price took a knock because the market didn't like Amazon Web Services outlook. I think they sort of forgot about the rest of the company, but that's the first point. So I think the pullback is probably a buying opportunity for, as with Google, and a company that you really cannot ignore, and I don't think excessively cheap, even at the historic price. I think it's about
So on Bidvest, it's one we like. It's a good industrial company, but the problem with Bidvest is you're really playing the South African macro. I think about over 70%
Yeah.
of their earnings are local, and that's one of the big issues. Obviously, freight is the big one within the company itself. So freight, call it Adcock, those are kind of the perennial, call it underperformers. Freight really relies on agricultural products being moved within the local space, and we know that our ports and rails are not really efficient at the current moment. But it is a good company. They've grown through acquisition quite a lot. They've, geographically diversify their earnings across a couple of regions, Ireland, Asia, the US with that call it Citron hygiene deal, and they're trying to embed that, and obviously that'll be earnings accretive going forward.
Yeah.
So there's a lot of good news that are baked into Bidvest. It's one that you hold and you hold for a long time because cyclically it will be affected by the macro cycle because it's an industrial, and it really needs the South African economy to actually start pumping, and obviously the backdrop overseas and where it operates in those jurisdictions to also start improving. And with respect to Amazon, I mean, look, it's another IP story. You're looking at the Amazon Web Services, which is going to be a big thing.
Yeah.
So cloud computing is quite a big thing currently. And if you're holding that for the next couple of years, I mean, you will do well. It's a big company. It's big e-commerce giant, plus the IP around cloud computing, which is the next big thing with respect to AI. So yeah, we like them both, I would say.
Okay, what else do you like? Where are you seeing opportunity at the moment? Let's get into your stock pick.
Yeah, look, I like ShopRite, and from the prior results that just came out,
Yep.
I mean, you saw it's a top line of 250 billion. It's quite a massive number for a South African retailer. I like what management is doing with respect to selling non-South African supermarkets and trying to focus into South Africa. They're also selling, they sold to Pepco, they are furniture business, and then obviously they'll use that amount of cash to de-gear and obviously start investing in their technology front. Again, there's good things that are coming out of there. I think the most talked about one is the 60-60 performance, where they cornered that market. 80% of all deliveries for general and call it groceries are by 60-60, and the competitors are nowhere close to actually getting foothold in that market. So while you're seeing competitors, trying to consolidate their operations and be better and leaving white spaces behind, you're seeing Checkers or ShopRite moving into those white spaces. So if you're out of consumer side, you're out of wallet space, so you don't capture that wallet, you're sharing the wallet. So they're doing quite well. I like what management is doing, and the vision, the strategy going forward, focusing on their domicilium, so their prevailing market, which is SA, is a good one, I think.
And just on 60-60, one thing that blew my mind this week was when I read that the sales at 60-60 are almost equal to Spar and Pick n Pay's market cap. And that's just showing how big that unit, just the unit, is in one big mammoth company.
Yeah, so the other thing to look at is both the entities that you mentioned are undergoing so they're trying to get their operations back into order. They've had a couple of bad runs over the years, and that's affecting them. And again, if you look at, let's take a Pick n Pay, for example, it's either closing stores or converting them to boxes where it can, and you leave those white spaces. If you leave those spaces closer to your consumer, you are forcing consumers to search for another service provider. And obviously with ShopRite having the muscle to actually get in there, they'll go into those white spaces, take over that retail, and then have presence, and that obviously gives them more market share. So that's the one thing that we're seeing where competitors are not gaining market share and losing, and ShopRite is entering that space and gaining market share as a result.
All right, let's leave it there, Lwazi. Thanks so much for your time and sharing your insights with us this afternoon. Now, that was Lwazi Matakane from Nedbank Private Wealth.